MBI.com. This is John. This report is for the 21st of October, and no shock here. I mean, we had the white MBI move. The MBI magenta had pivoted lower, still above the yellow, but we still expected some weakness below that, particularly if we broke the 23%, and that's exactly what happened. And it proceeded to follow through, and we can see here in pre-market, already eclipsed the down number for yesterday. So you can see we're right in that middle confluence. We don't have a strong presence of shorts or anything at this particular stage. We've had orange rising. I mean, these are all positives from a bullish standpoint. Just got no short-term buyers, and it's just lackluster. So, and it's interesting because this is where JPM was telling everyone this is a buy the dip opportunity. So there you have it. That was their impression of it. I don't think any of the macro situations have changed, let alone the Fed's position on curbing inflation. You see what's happening in, well, the UK, absolute disaster. And those political woes may spread. You're already seeing massive protests in France. Um, Italy already has a new government. So, I mean, there's a significant dynamic change taking place politically in a lot of places. And you couple that with some of the economic uh, self-inflicted scenarios and volatility. That's what we're looking at, and that's what to expect. So, from an NQ standpoint, pretty much consistent with the S&P, but even weaker. So, I would expect a further draw, uh, and particularly be watching if that magenta dips below yellow from a daily standpoint. Certainly, intraday, we're going to see it first, and that's simple enough. The euro surprisingly still doing fantastic. Yes, subpar, and some people think that that's dramatic, but the reality is for the contraction that, well, they say the EU is stopped its hemorrhaging and isn't cascading lower, but it's really hard to understand where that dynamic's coming from. More and more industries are having to close, limited power capabilities. There's just a myriad of issues that are just growing exponentially by the day. From a gold standpoint, of course, this will lead to what most would see as a deflationary um, position. Not many are holding the idea that you're going to end up with a stagflation where you're going to have the rising rates and also maintaining inflation for a number of years. I've always argued that they need double digit inflation for 4 to 5 years to help mitigate the deficit. And that was before they went crazy and really blew the budgets out. Now it's just ridiculous numbers. It's just inconceivable how they're going to pay for it. Number one, the interest is going to become a staggering number on the balance sheet, and it's not something that is even viable. I mean, when you look at the numbers, they're just insane. From an oil standpoint, 83 handle, it's right in the middle of the range, still enough to uh, create inflation. The question will be after midterms and after you've released your next 15 million barrels of the strategic reserve, then what? You know, prices will probably have to skyrocket from there. That will drive a whole nother cycle. Um, and things will get really interesting coming into the winter time. And of course, you can see this: the Fed not going to make any changes. I mean, this simplest trade ever created back when we were talking about it at 150 on TLT. Here we're down to 94. I suggested around the 93 range would be a pretty solid point. Now, if we start going below that range, then you're looking at rates that are starting to get back towards 80s levels, and that would be interesting to see happen. It's not impossible. I don't think the Fed is that stupid, but you never know. You wouldn't have thought that they would have done a lot of the things that they've done up to this point. So it's a whole different story these days. Bitcoin, again, like I said, yes, it's flat and all, but remarkably stable, um, and really showed a maturity now. And so this becomes pretty close to that 16K range that it originally blew up to before it started that mad cycle period where everyone was into it. Now it's just become kind of a basing point. We'll see if the market suffers any more significant moves, whether or not it would impact it much. I think that this seems to be kind of like a stabilization point for cryptos in general. And then they become less interesting because they're certainly not capturing the volatility that they were gaining before. 50K, nice clean for the pink bar standpoint, and yeah, we've been lower, ugly. Since then, love these magenta pivots below that 25. It's just so clean. We saw so many of them intraday. We're looking at the 5K. We started lower, had a couple little pops, nice turnarounds, and beautiful moves in general. But then we started capturing just a lot of white MBI leading. Um, and this was an interesting one. We had the white MBI lead that started off with this power push up where we already had green over cyan and red DOC rising. So it was sort of a counterfluence and it led to a nice spark. But you keep in mind this number is close to that 3692 algo retrace. As we spiked up, boom, started to get a little bit of selling action, more MBI white calling for a move to the zero, which it did over here. Then MBI white perked again, came back down, got close to, and then boom, finally eclipses that same move. So it wasn't incorrect at the time, it just took a little bit before it got there. And they tried to just get it back above there and hold it, and it just, no, there just wasn't enough support. You saw these MBI weight spikes, not over the 40 like this dramatic one or the secondary one right over here. Those have a bit more power to drive to the zero. Just wasn't that much distance when it's at the 50. But again, this is where I look at those pivots of a magenta below the 25, and it's just like boom, it's just a super cascade. They're just fantastic. Even here, you're at the algo level, spikes down, boom, nice cascade. uh, One of the best trades. I'm actually going to run a separate program that will give just the percentages on that move alone, because I think it would be interesting to see. I'd have to set some parameters for the profit taking side of it, but clean nonetheless. And I think some of these even buyback moves in that they're all pretty straightforward, clean delineations. Again, you get this issue where we had a lot of these on these bull runs where the red was leading. It's just an indication that it's probably not going to last very long. And sure enough, when it does break down, they're usually pretty clean. And in this case, not so much. Went only to the 50% from the 100 to the 50, and could get back up and then made all the way back down to the zero plus. So just keeps fulfilling it. And now we're down at the 3650 range, right at exactly what back in the summer everyone was leaning towards the Fed put value when we were still over 4K. So interesting times, and I think that this is where a lot of people get scared and want to run from things. I think it's just the exact opposite from our standpoint. I think it's when you increase volatility in these things, it's time to attack, particularly when you have a strong signaling of direction, because I've always argued that your outside gains come from these extended runs where you're in a position where everyone else is scared and we're able to see exactly the direction. I think that definitely has motivation factors. So anyway, we just continue to do it. I will put up relevant details on the Skype chat, and we'll just keep hammering away and enjoying how clean these reads are. Trade well. We'll talk to you later.